So China's moving fast to take down the dollar, and today we are going to deep dive into their plan to de-dollarize the world. Now, we all know that China-US relations are near rock bottom, with China calling the United States a bully and the destroyer of the global trading system. And it's hard to blame them when the US have been slapping technology sanctions on China to cripple their semiconductor industry, plus now they're about to cut Huawei's access to US banks, which is yet another sanction saying that the company is engaging in economic espionage. So this tit for tat is only going to escalate with China taking the fight directly to the beating heart of America, which is the US dollar. And as you'll soon see, they are attacking the reserve currency from all angles, right? They are attacking from all sides. And China's on a war path, and they are not going to stop pushing the dollarization to the world. And we need to understand this because the world is fracturing, right? It's splitting into two. One will be the current world order that's dominated by the US dollar, and the other is going to be countries tired of the reserve currency and opting to use alternatives to break free from the Western financial system. And as 2022 has taught us, the US dollar is being weaponized like never before, and now China is taking the chance to capitalize on the policy mistakes of the United States to knock off the dollar off the pedestal. So the first point of attack China is doing is dumping US treasuries, right? This is the most obvious move, and it's getting worse with their treasury holdings now falling to a 12-year low. And we can see in the latest treasury report, China's holdings of US bonds have fallen yet again in October, dropping by $24 billion down under 910 billion, right? And it's not just China that's dumping US debt. Japan sold that insane $42 billion worth of treasuries to help save the Japanese yen. Now, what we are seeing is the world losing faith in US debt for different reasons, right? We are still in the currency crisis, guys. The yen, the pound, the yuan, the euro, they are all down versus the dollar, and rate hikes are still going up. Jerome Powell isn't done yet, and there's going to be at least 2 or 3 more hikes left in this cycle from the Federal Reserve. We are likely going to see at least 5% or even 5.5% interest rates in 2023. So yields are still going to go up over time and prices are going to come down. And that's why we are seeing many countries over the past few months start to dump their treasuries because the losses they are piling up. And this is where China comes in, right? They've been dumping treasuries since February this year, ever since the West froze Russian assets, right? And this is having a material effect on the treasury market. The yuan is still down by 8%, and investors, they have been leaving Chinese bonds because China isn't raising rates. They can't afford to. So their only alternative is to sell dollars to defend the yuan. And China is using this situation to sell off their treasuries because it adds further pressure on American bond yields to rise. Remember that when you sell a bond, you lower its price and force the yield up. And when other countries see rising yields thanks to the Fed hiking rates, and from countries like China and Japan selling, they might want to sell as well to protect their positions, right? Now, what China is trying to do is to try and trigger a global treasury run, where selling continues because confidence in bond values is collapsing, right? And this is not good because we already have a super yield curve inversion, which tells us that a recession is coming. The 6-month yield is at 4.6%, well above the Fed funds rate of 4.25%, and the 10-year has crashed to 3.5%. And this tells us that investors are already very pessimistic about the future. Further upward pressure on yields will hurt bond prices, the US economy, and the US dollar as well. Now, the Great Treasury Dump is only the tip of the iceberg. China still has to hold some treasuries to run a trade surplus and make their exports cheap and competitive, right? So they can't just dump everything, there's a limit to it. And that's why China is also pushing for the dollarization in the Middle East, right? They are targeting the petrodollar system. They are trying to break the wheel itself, the entire system that feeds the US Treasury market and forces the entire world to hold dollars in reserves. And this is why China visited Saudi Arabia just a few weeks ago, right? It's not just to secure their energy supply. Oh no, that's just surface level stuff, guys. That's just pointing out the obvious. Now, the real agenda here is to push for oil trade using the yuan. In the China-Saudi summit, President Xi, he pledged to support large quantities of oil plus LNG from the Gulf and Arab states, and China will use the Shanghai Petroleum and Natural Gas Exchange to carry out yuan settlement of oil and gas trade. Now, what China is trying to do is to disrupt the petrodollar system by trying to get the Saudis and OPEC to accept yuan for their energy deals. And if this happens, we are going to see the dollar get squeezed even further. If the Gulf nations start to price oil in yuan, that means they'll hold fewer dollars and there's a lesser need to reinvest back into US treasuries, right? In fact, if they hold more Chinese yuan, if they hold enough Chinese yuan, the Middle East would naturally either invest into Chinese bonds or use the yuan and buy more Chinese goods, right? Have more trade with China. And I know this sounds improbable and the Middle East would never do that, and many believe US Saudi relations are still strong, right? Now, let's just assume that it's true. And MBS will continue the security arrangements with the United States, right? Now, China still has a powerful card to play, and that is the reopening of their economy. So, if OPEC controls the supply side of the equation, of the energy equation, China now controls energy demand because they're still in lockdown, right? In fact, China's energy consumption is almost double that of the United States, so China could secure tons of revenue for the Middle East and flood them with money when they reopen, right? And when China reopens, they could increase demand by 3.3 million barrels a day. That's a lot of buying power. And according to Goldman Sachs, this reopening could send oil soaring by $15 per barrel. China might just use this as leverage to get the Middle East to de-dollarize their oil sales and start pricing in the Chinese yuan. It'll be a win-win proposition, right? The Arabs can secure their revenue streams away from the West, while China gets to push the de-dollarization agenda where it hurts the most, the petrodollar system. But we also have to talk about gold. Just a few weeks ago, China revealed to the world that they increased their gold reserves by 32 tons, bringing the total up to 1980 tons, right? Just slightly under 2,000 tons. Now, obviously, this isn't much, and China has probably been buying much more gold and they are transporting it from the west to the east. And we can see the local price premium in China has been positive for much of 2022. The spread between the Shanghai price and the LBMA is around positive $20, and that's causing gold to flow towards China. And what China is doing is acting as a black hole for gold. It is sucking everything in, and not much gold is being exported out of the country. And this is causing a de-dollarizing effect, right? And remember that gold in the West and for most parts of the world actually is priced in dollars. So when investors, traders, and central banks all buy gold, they are in fact selling dollars to buy the gold bullion, right? And that's why I believe China's gold announcement is a message to the world. They're effectively saying, hey, we are buying gold, we are planning something with gold, and if you're smart and want to hedge your bets, it's time to buy gold as well. And we know China has been stockpiling gold and probably using the sales of their US treasuries to buy tons of physical bullion, right? And we have to realize that China and Russia, they have every incentive in the world to knock the dollar off the top spot. Just the yuan alone tied to China's economy isn't a big enough draw for countries to de-dollarize fast. Remember that over 60% of debt is still issued in dollars, and unless countries unwind those gradually, they will face another US dollar shortage and start another currency crisis yet again. And that's why if China is looking to accelerate the dollarization, they have to throw the world a bone, and a rather big one. And to do this, they could back up their currency with a commodity, and most likely it will be gold, right? This will probably be the sales pitch. Why hold dollars when it could get sanctioned away and the Federal Reserve could always print money again and again and devalue your holdings, right? Why not try our currency backed by gold that will hold its value? Now, I have no idea if it will be a 100% full pack or just a 20% pack, 10% backing, but it's much better than the dollar, which is a pure fiat currency that has lost 97% of purchasing power over the last 100 years. And we need to watch the gold markets very carefully because China definitely has an agenda. They are not just stacking gold for fun. And when it comes to de-dollarization for China, the best situation is to reduce dollar usage while increasing the yuan's importance. And China is trying to extend the yuan's reach by extending swap lines to the world. Now, swap line is basically an agreement facility between two countries to exchange currencies with each other. For example, China has the 350 billion yuan swap line with the UK, allowing them to exchange pound sterling for the Chinese yuan. Now, this is important because it pushes the yuan out as an alternative currency that is within reach for countries. Now, this is especially critical when it comes to a currency crisis where the dollar is strengthening well beyond the reach of most emerging and even developed economies, right? So instead of countries selling off their local currencies to buy dollars for their imports, they can swap their currencies, the pound, the euro, for the Chinese yuan to buy Chinese goods and products. Now, this prevents a further devaluation of their currencies and circulates the yuan more around the world, right? And we can see that China is aggressively expanding their bilateral swap agreements around the world. Today, China's central bank has swap lines with over 40 countries compared to the Federal Reserve's long-standing swap arrangements with only 5 countries. And if we look carefully, the swap lines with the Federal Reserve are Canada, the UK, Japan, ECB, and Switzerland, right? The majority are NATO and American allies, and it's all about protecting their own inner circle. However, China's goal with 40 swap line agreements is to reach as many countries as possible, and in 2020 alone, the amount of yuan that can be accessed exceeded $550 billion worth. They want to foster more local currency settlement arrangements, and it is working. Indonesia has cut their US dollar exposure by $2.53 billion in 2021, and it's going to increase by another 10% this year. Because what China is trying to do is to get countries to embrace the yuan, like what Russia's economy is doing, right? They are calling it the yuanization of Russia's economy because the yuan has jumped from 1% to 45% share of Russia's forex market. And because there's just so much demand for yuan in Russia right now, corporations, they are pricing their bonds in yuan. We have Russian commodity giants such as Rusal, Rosneft, and Polyus raising 42 billion yuan in bonds, driving even more demand for the currency. And this is what can happen if the yuan internationalizes, right? It creates demand for even more yuan and drives opportunities to replace the dollar. And if countries and companies start transacting more in yuan, they will be naturally start pricing more of their bonds in yuan, pushing the dollar away. And this helps lower China's borrowing costs, allowing their economy to grow even faster. So we must take notice of what China is doing on the world stage. The more gold they buy, the more swap lines they give, the more treasuries they sell, the more they chip away at the dollar. China is going to continue de-dollarization, and the West is going to become less investable for China itself because it just doesn't make sense. As Zoltan Posa of Credit Suisse mentioned before, for certain large countries in the global east, it makes absolutely no logical sense to roll their investments in G7 debt claims. Not just because of what happened to Russia's forex reserves, but also because rolling a $1 trillion portfolio of US treasuries means that you will fund the West's efforts to rearm, reshore, restock, and rewire against the East. If China buys US treasuries and continues to prop up the dollar, they could very well be shooting themselves in the foot. So watch out for the signs of de-dollarization, especially the big one if China manages to get the Middle East to price their oil in yuan. So let me know what you think in the comments below. Will China succeed with de-dollarization? How long will it take? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.